Welcome to the Building Interest Podcast presented by Leader Bank, a series of free-flowing conversations on a wide range of banking and money-related subjects. We are here to discuss all the issues that impact your financial future. Do you want to buy a home, start a small business, or secure your financial future? Or maybe you want to maximize your savings ability, get your budget in order. We can help. Our talks with experts and influencers across the world of banking will set you in the right direction. I'm your host, Greg Farber. Let's jump right in. We are back with the Building Interest Podcast, and today we'll be talking about taking control of your financial future. I'm your host, Greg Farber, and I'm here with a few financial experts, our very own Savy Ouk-Fernandes, Vice President, Retail Bank Trainer, and Elevate Relations Manager here at Leader Bank, and Chris DeCilio, owner of DeCilio Financial. Savy and Chris, thank you both for joining me here today.
Well, thank you for helping us, Greg.
Thank you.
We're happy to be here.
Awesome. Well, Savy, I want to start with you. You've
Sure.
been with Leader for a number of years now.
Yes.
We were just talking before how we both feel like we've been here for a long time.
Yes.
And I'm curious to know what drew you here to Leader. Were you in banking at your prior job as well? And what made you decide that Leader was the place for you?
I was in banking. I've been in banking for over 20 years now. I started out at a local bank. What I love about banking is definitely the client service aspect of it, as well as mentoring personal bankers. But most importantly, is definitely the client, servicing the client's need. What got me here to Leader Bank, it's the community, the sense of caring. It's definitely a family environment.
A local brand as opposed to a big bank.
Correct. Exactly. Everybody knows everybody. At the end of the day, we all look out for each other. And especially when it comes to clients, referral base is very important. And I think all of our clients are very happy, very satisfied with the service level that we provide. And I really love that aspect of it about Leader Bank.
Absolutely. I couldn't agree more. So Chris, and again, welcome and thanks for being here.
Thank you.
When you first met Savy, was she already here at Leader?
I believe so. My recollection is about 10 years ago, I was looking to refinance my mortgage. I got a tip on Leader Bank. And after that process was done, my mortgage officer introduced me to Savy, who was working on creating a business collaboration type effort.
Networking group.
Yes. And that's how our professional relationship
Yep.
started.
So let's back up a second here and lay the foundation. Chris, can you explain for our listeners what is a financial planner and what is your role to the client?
Well, let me answer that a couple of different ways. First, I want to paint a picture for you. Imagine a Venn diagram. So imagine a circle in front of you, and now imagine a series of circles around the perimeter overlapping with that circle and maybe a little bit with one another. So each of those circles represents a different component of financial planning. One might be investment planning. Another one might be taxation. Another one might be risk management, insurance, and budgeting and cash flow, and so on and so forth. So those are all very important aspects of financial planning. The circle in the middle is me. I am central to a process where I utilize my expertise and experience and knowledge and bring those different aspects of financial planning together to build financial plans for clients and manage their wealth.
So I really like that idea of that picture. And so now you may have a customer that has one or two of those financial needs, or maybe even three, and it's your role to bring those together and get the client on a path that achieves those different goals that they have. Am I getting that right?
A couple of those might be more stress for certain clients. Most clients actually have a need for all of them to some degree. They just don't know it.
Well, taxation sounds like it would be a stressful one for the clients, right?
Yes, it certainly is. And that is one of, over the course of a lifetime of an individual, usually their biggest cost. So that's a very important aspect. They're all very important. But that answer is kind of a Investopedia, sort of a textbook kind of answer.
Okay.
The other way I approach my job is from the perspective of psychology. So there's a discipline called behavioral finance. And I've always been very intrigued by it. It basically seeks to understand, observes and tries to understand why people act the way that they do with their money.
Spending patterns, the things they save for or don't save for, this kind of thing.
Yes, fear, greed, fear of missing out, fear of losses, herd mentality, procrastination, all that sort of stuff. And so sometimes my job is very simple. It's just trying to get people to do things that they sort of already know how to do and they could probably do themselves, but for whatever reason, they don't do it.
They don't have the impetus or they haven't formalized it, written it down, something along those lines.
Something along that lines, yeah. So let me give you an example. you probably have access to a 401k plan.
Yeah.
So
Sure.
imagine somebody is an employee becomes eligible to participate in a 401k plan. The company says, hey, congratulations. You're now eligible to enroll in our 401k plan, and we're even going to match some of your contributions. All you have to do to sign up is just these few little steps over here. And you'd be surprised how many people don't do it, even if they know that they should. They just, for one reason or another, they just don't.
It's not for you.
So along comes something called automatic enrollment. And this was designed to fix this problem. And it worked. Participation rates went up. Because what happens is that same employee might get a notification from the company that says, hey, congratulations, you are now eligible and enrolled in our 401k plan. And by the way, we're going to offer a matching contribution. For right now, we're going to put you in an age-based target fund, but you can change it if you want to. And if you want to opt out of this, all you have to do is take these, these few simple steps to opt out of the program if you want to. And people won't do that either. So
inherently, you've increased the engagement with that one simple step.
Yeah. People will very often not take proactive steps to do what's in their best interest. They will also not take proactive steps to undo something that is in their best interest. And so that is one example of a way that I try to help people remain accountable to themselves and guide them along. So a lot of my practice, there's the expertise and knowledge part of it, but much of it is just me acting as a motivator, an encourager, sometimes a disciplinarian, sometimes a little bit of a therapist. And because so many of our goals are intertwined with money, for better or for worse, I'm often acting as a life coach as well.
Right.
And it's all good. I love what I do, and it's part of the reason I do it.
But it's all very different from traditional banking. And when you say it's all about money, and so is banking. And yet, when most people think of banking, it's about having something traditional, a checking account to pay your bills, a savings account maybe for those vacations or rainy days, not even as in-depth as a 401k plan. Maybe they want to get a mortgage to buy or refi their home, that sort of thing.
Exactly.
So I'm curious now, and from you too, Savy, how your relationship has enabled you to kind of bring your clients maybe together to enhance that banking experience where your traditional banking customers might not be looking for financial advice, but you can, provide that, and vice versa. You may have some folks, Chris, that came to you for advice, and they may need that banking foundation before they can really move forward with it. Can you talk to me a little bit about that experience?
Yeah, absolutely. So I feel like, banking, again, we're all intertwined, right? We're that circle that you that you alluded to, we're all connected in that way. A client comes to us for the investment and stuff. You need the account. The bank's kind of like that liaison between the client and the financial advisor, because they need to set up the account. If, like you said earlier, if they're looking to save funds to purchase a home, they need to put a certain funds away. And that goes back to Chris referencing in regards to savings, which we'll go a little bit deeper into that in a bit. But you need to be able to have game plan, planning accordingly as well strategically. So I think this is where the bank comes in regards to what kind of vehicle we're going to put these products in. Is it going to be a savings? Is it going to be a checking, a money market, a term account such as a certificate of deposit?
Or some combination of all of those things.
Correct. Exactly.
Now, I've heard of this thing called the 50-20-30 rule, which is this rule of thumb that, you put 50% of your budget towards essentials and, another 20 maybe towards savings or financial goals, which, as you mentioned before, Chris, not everyone does on their own. And then you keep that 30% left over as kind of your fun money. Now, that pretty neatly separates needs from wants. Is that really just an oversimplification, or is that a real thing? Is that how you approach, savings plans with your clients within sort of that framework of those needs and wants? Well,
I think you described it well as a rule of thumb, and there are many others out there like it. It basically just tries to help people prioritize between spending and saving. The 20 that you see in that equation, that's been around for a long time, and on occasion I will mention it to a client if they're below that 20, and I feel like they can get to that 20. But for a lot of people, it's just not a very realistic number. The U.S. Bureau of Labor Statistics recently came out with our national savings rate, which has dropped to a dismal 4.4%. And a lot of that has to do with what's going on right now with inflation. It's really tough on people. But it's been a chronic condition for the United States for many, many years. the savings rate. So people who are just struggling to get by, 20% feels almost impossible. That
Right.
50% on needs is probably a little bit low. On the other hand, there are high net income earners and net worth individuals who have the means to save more than 20% and need to if they're going to maintain that lifestyle later in life. So what I encourage people to do really is to develop their own equation.
Okay.
And that really starts with establishing some goals, maybe doing a budget, figuring out where their money goes, and making a determination of, well, how much money do I need to set aside in order to make that financial goal happen? And that helps people prioritize between how much they save and how much they spend. I tend to break it down into needs versus just discretionary income.
Okay.
And the discretionary income can be parlayed into things you want to do and things that you probably have to do to save for your future.
Right. So the needs includes a little bit of future saving for retirement, things like that. But then some savings is also in that discretionary as far as vacations or things like that. So it kind of encompasses both of those
Yeah, I guess
sides.
it begs the question: what is a need and what is really a want?
Right.
Is a vacation a need? Is it a want? But you had mentioned, saving for retirement maybe as a need. I actually encourage people to look at it that way, to pay themselves first, almost look at themselves as their own creditor, if they can, because that's, I think, one of the best ways to save for the future. Just put yourself in an automatic savings plan and make that part of something that you adhere to.
So not necessarily always 50, 20, 30, but like you said, as a rule of thumb, kind of a starting point to see what are your goals, what are your needs, and then how to fit those into 100%.
Yes.
Yeah, exactly. The other thing I want to add too is that with direct deposit, it's one of those platforms that definitely can help client, but a lot of clients don't, like you said earlier, we have to simplify things for clients, right? If the process is more involved, people get discouraged. So I think with my role and Chris' role, it's all about simplifying, helping our client to simplify their banking experience as well as simplifying their financial process. With direct deposit, it's one of those things. You set it, you forget it.
Yep.
Right? And so before you know it, that funds accumulate to now you're over exceeding your budgeted amount. So we talked, I think that direct deposit is one of the components that people don't really take advantage of.
That is a great point. And I actually do that myself. When we first started a family, we decided that some of our paycheck would just automatically go into a house fund for repairs and an activity fund so that we could pay for things like summer camps that have started right now and things. So where I don't have to think about and the take-home pay I get already has that carved out of it. Like you say, it's simplified, it's automatic, and that savings tool is actually happening.
Right.
I'm very much in favor of simplification as well, and automating as much as you can of the process.
Yep. Exactly. Yeah.
Now, Savy, so if a client approaches you with a bigger goal in mind, they might be a new client, they might be an existing client of the banks or whatever, but now they've decided they want to start saving for a down payment on a house.
Right.
That's a much bigger goal. That's probably not going to happen if you set $200 a month aside from your paycheck or something.
Right.
Is this something where then your professional relationship with Chris?
Right. Of course, it's about exploring that exploratory phase to understand what the client's needs and wants are.
Right.
We need to, and number two, we need to be able to, part of that exploring phase is how much can they budget for, right? And I think that's when Chris comes in. If they want just maybe a basic savings account, we can absolutely do that, or even a money market account. But if they're looking for something that is more, that will take maybe a couple years or so and stuff, that's where when Chris comes in.
So I just want to come back to something that I mentioned early on when we got started in this episode. And we talked about, you've been here for a long time. And you talked about how much you love the clients and kind of what keeps you coming back. What is it that keeps you coming back to work every day, Chris, and being part of this money engagement for clients?
Well, I think I fell in love with the concept of financial planning in my early 20s. I didn't really get much out of my college experience. I learned what I wanted to do after I paid all that money.
I know how that feels.
But I actually don't really look at my work as a job. I look at more of a calling in life, perhaps. And so when I wake up in the morning, I'm working for me, but I'm working with some great people, and I enjoy that an awful lot. I enjoy forging long-term relationships with them. And when you're very delighted with what you do, it doesn't really
it's not work.
Yeah,
right.
It's not work. Exactly.
Yeah.
And the day goes by so fast.
Yes.
Right? Yeah.
Yes.
Yeah.
Well, it's also function of us getting older too. But yes, I mean, when you like what you do, it doesn't make the day go by fast.
Right, exactly. And I think that, when you love what you do, definitely shine through to your client. And it's so genuine, it's so sincere. And I feel that in the line of work that we do, that sincerity translate into trust. And we know that when it comes to client finances, people are there's a lot of hesitation, a lot of concern. So trust play a huge, huge component with the decision making. Because when it comes to decision, it's all emotional. Right.
But you have to be comfortable. You have to feel that connection with the person that you're working with in both ways.
Exactly.
You have to feel it. The client has to feel it.
Exactly.
Yes, it does need to be mutual.
Yes, exactly.
So as a parting thought, and not necessarily specifically for either one of you, I want to touch on, you mentioned the economy and how much things seem to be changing every day in our world. Is there any advice that you want to offer for our listeners today to stay on top of their finances at a time when everything seems to be getting more expensive? I'm looking at the gas pumps here. And, what are some things folks should keep in mind when making money decisions, specifically in today's market?
Well, I would say the first thing is that it's okay not to feel great about what's going on. It's a very normal feeling. It never feels good to watch account balances shrink and to have to pay more to fill up your car or to buy groceries or what have you. I think if you're somebody who's constantly looking at your account balances, that's probably not healthy.
Right.
On the other hand, I do think times like this give you an opportunity to do what we might call a gut check and just to figure out, okay, am I being too aggressive with my portfolio? It's one thing to hypothetically think about, say, a 10 or 15 or 20% loss on your assets. It's another thing to actually go through it. So I think this is a good time to reevaluate where you are. And if it turns out that your goals haven't changed and you had positioned yourself where you are for the right reasons and you have a good emergency reserve, which is probably important nowadays because if we go into a recession, you're going to need it, maybe. If all things check out, then I would say not to stress too much, just stay on the train and keep plugging away at your goals.
Exactly. Yeah.
Nice.
Yeah. I want to add that my advice would say, again, don't panic. I mean, changes come and go, right? Yep. We all live through it, right? And we all overcome that. And if anything, it prepare us to be even more prepared in the future. So it's definitely, it's short term. I don't want to say short term, but change is not permanent.
Right.
So we just need to be flexible. And like Chris said, don't panic, don't stress ourselves. Because we're all going to overcome that.
Yeah, not
take
to
stock
make any,
of where we are, make sure we have the means to take care of what we need to right now, but don't panic and go liquidate those other assets that you've been saving and freak out or something. Stay the course with kind of keeping a level head. Like you said, it's not healthy. I remember checking my 401k balance earlier this year, and I decided not to check it again, and I haven't since. And I don't even want to know because it's not for today. It's for tomorrow.
That's when Chris said to me, don't log into your 401k. No point in looking at it now. You'll be fine.
Yes, it's just losses on paper currently.
No, that's great advice. I hope that helps the folks listening. And I just want to say thank you both for being here today. I had a great time. I hope the listeners enjoyed it. Yes. And if you have any other closing thoughts or anything, by all means. And thank you again.
Well, thank you. Thank you for having us.
I just need to read a quick disclaimer. Again, I am Christopher DeCilio, principal of DeCilio Financial of Arlington, Mass. Securities and investment advisory services are offered through FSC Securities Corporation, member FINRA SIPC. FSC is separately owned, and other entities and/or marketing names, products, or services referenced here are independent of FSC.
DeCilio Financial, Inc. is not affiliated with or owned by Leader Bank, N.A., and all opinions expressed by Christopher DeCilio are his own and not the opinions of Leader Bank. For more information on today's subject, visit leaderbank.com. In addition to past episodes, you can also find our corresponding blog entries for more insights. This podcast is a production of Leader Bank, N.A., Equal Housing Lender, member FDIC, NMLS number 449250.